If you think this week's brutal crypto crash was just another leverage flush, you are missing a massive global signal that could dictate the market for the next 2 years. You see, most traders are blaming headlines and liquidations, but the real trigger is a multi-trillion-dollar economic domino that just started to fall. Stick with me, and I'll show you exactly what caused this sell-off and the key dates you absolutely need to watch. In just the last 24 hours, over $750 million in leveraged long positions just completely wiped out. It was a catastrophic cascade that sent shockwaves of fear through every corner of the market. Now, the scale of this liquidation is absolutely immense, but it's a symptom, not the actual cause.
And this wasn't just some crypto event. This quote started flying around as a single chart pattern to put the entire global financial system on notice. The fear was real, it was widespread, and it pointed to something much, much bigger than just Bitcoin.
So that brings us to the big question, right? What really just happened? Forget all the noise and the panic for a second. We're going to break down the facts and uncover the hidden force that was really pulling the strings on this entire market downturn.
This whole thing was pretty quickly nicknamed the Cyber Monday crash. And as you're about to see, the name kind of fits. It was this sudden, violent move that caught almost everyone completely by surprise.
So just to paint a picture here, the market had been rallying. There was all this pre-holiday optimism. Bitcoin was trading comfortably above $92,000. Then, bam, in a flash, it just broke through multiple support levels and crashed all the way down near 84K. A truly brutal correction by any measure.
So, in the immediate aftermath, a couple of culprits were immediately blamed. This is kind of the surface-level story that spread like wildfire, but as we're about to see, it is far from the complete picture.
So the first suspect, as it always is, was leverage. And yeah, of course, that $750 million in liquidations certainly poured gasoline on the fire. It amplified the downward move, no doubt, but it didn't light the match. Something else triggered that initial heavy sell pressure.
And then you had the second suspect, this headline. A rumor started circulating that Michael Saylor's MicroStrategy, one of the biggest Bitcoin holders on the planet, might be forced to sell their stack. Now, a headline like that is designed to create panic. And you know what? It worked.
But here's the thing, the rumor was just false. Shortly after all that panic, MicroStrategy announced it had already set up a $1.44 billion cash reserve specifically for dividend payments. That's enough to cover them for almost 2 years. So, the bottom line? They don't need to sell a single Satoshi. The fear was based on a complete misunderstanding of the situation.
Okay, so if it wasn't leverage, and it wasn't some fake MicroStrategy rumor, what was it? Well, the real trigger was hiding in plain sight, in an economic domino chain that starts in the world's third largest economy, Japan.
This entire story, it all boils down to one of the most powerful yet least understood forces in global finance. It's called the carry trade, and it is a multi-trillion-dollar strategy that's been quietly fueling risk assets for years, and right now it's starting to unwind.
So what is it? Well, for decades, Japan has had near zero, sometimes even negative interest rates. This made borrowing Japanese yen incredibly cheap. So what did big funds and investors do? They'd borrow billions of yen, convert it to dollars, and pour that money into higher-yielding assets like US stocks and, you guessed it, crypto. This slide shows you the exact chain reaction. First, the Bank of Japan hints that it's finally going to raise interest rates. Second, this causes the yen to get stronger, which makes those loans more expensive to pay back in other currencies. And that leads to the final step. Global investors are forced to sell assets, like crypto, to get cash, convert it back to yen, and pay off their loans. That is the massive sell pressure that kicked off this entire crash.
And look, this isn't just a theory. We can see the effects of this rippling across every single major market. The unwinding of the carry trade is forcing this huge global reshuffling of capital.
And let me be really clear here. This isn't just about Bitcoin. We are witnessing a classic risk-off event. And that just means a massive rotation of capital out of assets that are seen as risky, like tech stocks and crypto, and into assets that are seen as safe.
And the data proves it out. I mean, as crypto and stocks were plummeting, that capital had to go somewhere. It fled to traditional safe havens. Gold rallied, and as you can see here, silver actually broke to a new all-time high. This is a textbook flight to safety right here in action. Now, this Japanese carry trade isn't happening in a vacuum. It's colliding with other global headwinds, things like weak economic data coming out of China and potential year-end tax loss harvesting from institutions. All of these factors combine to create a perfect storm of sell pressure.
Okay, so that's the why. We've unmasked the real culprit. But the most important question now is what happens next. So let's look at the key signals you really need to be watching.
All right, mark your calendars. Fed Chair Powell's commentary is always important. The PCE inflation data on December 5th is going to give us a clue about the Fed's next move. But the big one, the main event, is December 19th. That is when the Bank of Japan makes its interest rate decision. This will determine if the carry trade continues to unwind, which could send another huge shockwave through the market.
And all of this, it leads to the final multi-trillion-dollar question. Is this crash just a temporary storm caused by some macro adjustment, or are we witnessing the first snowfall of a new, long crypto winter? The answer may very well be decided in Tokyo on December 19th.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.